Hello and welcome to The Giving Edge, a philanthropy podcast. I'm Erica Mirich, principal and founder of Pivot Creative and Consulting, and your host today. We will be discussing future-proofing philanthropy, understanding emerging trends, with our experts from Endowment Partners and Pivot. We're going to share valuable insights and actionable strategies to ensure your organization's financial success in the ever-evolving landscape of charitable giving. Lilly Diaz is the principal and lead strategist at Pivot, with over 25 years of experience helping nonprofits grow capacity for profound impact. Lilly has helped raise over $2 billion for organizations worldwide. Becky McDonald is the co-founder and chief compliance officer for Endowment Partners and is committed to supporting nonprofit organizations to earn financial sustainability. At Endowment Partners, she oversees the management of the firm, client relationships, and investments. And Diane Tuntlin is also a co-founder and the chief investment officer for Endowment Partners. In her role, Diane brings over a decade of professional option trading experience and investment strategy expertise to nonprofit financial management. We hope you enjoy this program. Let's get started. Leela, can you share a few data points or emerging trends to help us understand the current landscape in philanthropy?
Thanks, Erica. It's good to be with you all today. I think it's always important to look at the history and history informs our future in many ways. And so I always love to look at the Giving USA statistics from the Lilly Family School of Philanthropy. And so this past year, I know for the first time in my 25 plus year career, we saw some very interesting data points and declines in some areas where we haven't seen before. I think the post-COVID lull, or whatever you want to call it, in giving, it has changed. During COVID, we had people's attentions in many ways. They weren't traveling, disposable income was potentially up because they weren't using it on other things. And so giving actually spiked during those years. And so now we're seeing something different. People are making different choices. And so but there's still a lot of really good news here, but it just informs us about strategies that we need to do this year, this next year, and inform things that you're doing within your development office. So overall, individual giving has declined slightly. And when I'm talking to clients across the country, whether it be in markets such as Los Angeles, Las Vegas, Denver, New York, I'm hearing a lot of similar things, that people overall, there's less donors potentially coming in. They're seeing less new donors coming in. They're trying to be more creative about holding on to the donors that they do have. And so event giving, different strategies around stewardship, recognition, all these things are really being put into play, into question, to see about how we can address, individual giving potentially declining, but also then looking at the forecasting to that, there's more wealth accumulated in this country than there ever has been. So I actually think there's a lot of hope and promise with individual giving. I just think we can't rest on our laurels right now, and we really have to be bold in a lot of ways, but I'll talk about that in a second. So
it's
always history
creative.
is something to look at. Yes, be creative, exactly. But history is something we always need to look at. The Giving USA data is coming out very soon. So we'll be seeing the new data released. So what you see is from last year, but that's what's most recently available. So the new data for 2023 will be coming out soon. So it will be interesting to see, how that informs other things for the future. But I always encourage all of us to look at that, especially if you don't have access to benchmarking data, if you're not a part of a school system or a group of museums or hospitals where you're sharing information. This is the best thing available to us. And it's been around a really long time, and it's really solid information. And so I know it's something I always really look at every year when it comes out. But in terms of the forecasting, and so looking out ahead. So this past year, there was some really interesting data put out called the Philanthropy Outlook through the Lilly Family School of Philanthropy as well. And what this did was have access to some different kind of information. And so instead of looking back, it was really looking forward and pulling information about, what's average wealth collection in this country, disposable income, how are people using their disposable income, choices they're making and how they're choosing to exercise their time and values, and whether that's how many people are voting versus giving, all these sorts of things. So in the forecasting data, it's really interesting. And this is what's really encouraging to me and what we're telling all our clients right now, that like everything that you've ever wanted to do, like now's the time. Don't wait. Don't hesitate. People that are hesitating are going to miss out potentially on this wave. And I, again, trying to be positive, even in an election year, I think there's still a lot of people who are choosing to influence the community and exercise their values through philanthropy in different ways. And so we need to be able to provide them those opportunities and show them how they can exercise those values in critical ways. And so continuing to invest in individuals and those relationships is really important for everyone's fundraising strategies this year. So yeah, in terms of the forecasting, 2024 looks a little better. 2025, we're going to see, we'll have to see what happens with the election. There might be some tax law changes, depending on, what that looks like. People might be a little conservative. There's also still a lot of conflict going on in the world. And so that is also influencing some people's giving. And, hopefully in 2025, that comes to some rest. But that potentially will still have an impact. But the area that I think is really interesting, where some nonprofits, if they haven't spent time, is foundations. And so the foundation community is really growing. And those are, organizations that have been sitting and growing their assets and, required to give out, depending on what their policies are. And I know Diane and Becky can talk about, investment strategies and why, and how those are important, but that's also going to pay back the nonprofit too. And so foundations have done really well. And there's also been an influx of foundation giving because there's a lot more families that are either creating family foundations or donor advised funds or different vehicles for them to harness their family giving. And as we're looking in this epic era of transformational giving and this change from generations. And so that's going to have a huge impact on potential foundations, because foundations are going to probably be a big vehicle that generational wealth gets shifted.
Yeah, I think that's going to be something that we'll talk about in future episodes, is talking a little bit about that generational wealth shift and also gender wealth shift that's happening. So I think that's something we've all are really excited to talk about and share. Leela, do you think that you could share with us, you've given us some great talking points, we've seen some data. What should our listeners who are involved in nonprofits, perhaps as board members, perhaps as executive directors, what should they be asking of their organization? How should nonprofits or nonprofit leaders think about these shifts that you've pointed out to us? And what are some tips that you might have for the board of development, a board or development directors for those teams that are leading nonprofits through these emerging trends?
Yeah, no, thank you, Erica. I think there's, so many things I would tell you to be looking for, but I tried to boil down to 8 kind of points to think about. And, what I would also say is I also sit on a board, I chair a board. So these are questions that I'm asking in my volunteer role, in addition to the, the many clients that we get a chance to serve. But just like we talked about data, I think data is so important. And so the things that you should be looking for, asking your development office for, certainly knowing where all your money's coming from. What are all the sources of revenue? That needs to be very clear and understood. and what are the total numbers? How many people are giving, whether it's through membership or outright donations or event attendees, just understanding what the breakdown is of how people are contributing to the revenue channels. We want to understand the new donors, recurring donors, what we call lapsed donors or at-risk donors, people that haven't given in a year or two, LIBUNts, SIBUNts, for those of you who know those terms. Making sure we're paying attention to those, looking at donor retention rates. How well are you doing at keeping donors? Because it's so hard to get donors. And then once you have them, are you doing a good job retaining them? So looking at those retention rates is really important. And what's your churn rate, right? What's the first time donor that comes in and then doesn't give again, right? Like that's also telling you something. So those are things you want to look at. I think it's also really important to look at the levels of giving. So whether it be, the $1,000, 10,000, $50,000, like how is your gift table breaking out every year? And really paying attention to if donors are putting restrictions on gifts or what they're wanting to restrict. And so those are things that you should be paying attention to. As Erica mentioned earlier, be creative. Don't be afraid to be bold. I think clients that I've talked to that are struggling have relied too much on one source of revenue. And so, really encouraging everyone to look at various revenue channels, and even non-traditional revenue channels, whether it be social impact investments, looking at private partner, collaborations, government grants. If you've not pursued that before, there's all kinds of funding out there. Invest in your donor relationships. The donors you have in front of you right now are your best future givers. So often we come into organizations and they're like, who are you going to find for us? And I'll say, I'll look in your database because they're there, right? We know they're there. And so invest in the people that are already giving to you and do that in meaningful and creative ways. And that doesn't mean just a tax letter. Try to be more thoughtful than that. Monthly giving and recurring giving programs. If you don't have that in place right now, I would highly encourage you to think about how you launch that. And for many of you, July 1 starts a new fiscal year. So think about how you might incorporate that into your giving plans next year. It's a very steady source of revenue. And so it helps development offices budget better. And so it's not just you're planning for like a December big increase. It gives you some steady revenue to depend on all year. So that's something I encourage you to do. Be transparent and straightforward with donors. I know Becky and I have had some recent interactions and conversations with with a client, and we've been really transparent with some potential funders, and it's resulted in incredible results. And have another project where we asked for a certain amount, but we laid out everything we needed and actually came back with double what we asked for. And so we're seeing that transparency and honesty really matters, and particularly when you're talking to people that have assets to have an impact.
Yeah, I'd love to move the conversation a little bit to talk a little bit about strategy. About Lilly, you brought up so many amazing, great points related and insights and suggestions for leadership teams and development teams to consider. But I think your point about transparency and about creativity and creative thinking is really essential. And I'd love to pivot that conversation so we can hear from Becky and Diane. Your work within the investment management side of nonprofit impact is profound. Can you both share with us a little bit and share with the audience about specific ways that nonprofits and their leadership teams can take this great information and these emerging trends that Leela has shared, some of the data and suggestions, and put it into action? What tools can best be leveraged to set organizations up for success for financial sustainability? Share with us your knowledge.
It's a great question, and we think about a multi-channel approach for fundraising with an investment lens. Obviously, as money managers, this is the approach that we take and the perspective that we bring to our clients. A couple of specific things that Leela mentioned, though, that come to mind for me first and foremost, she's talking about, the increase in wealth across the country. We've seen the stock market this year to date, hit all-time highs. It feels like every other day there's an index hitting an all-time high, and we have seen since 2022 the market recover quite nicely and rebound after the kind of the pandemic dip. So with that being said, balance sheets are strong for many philanthropists across the country. What we talk about when we think about that particular fact, knowing that wealth is accumulating, whether it's going through a multi-generational transition, or just at the head of household level, when as a nonprofit, when you have avenues for your donors to support you in appreciated assets, those gifts are significantly larger. There's an additional benefit for a donor to be giving gift of stock, right? So for example, we can talk about the Magnificent Seven, which are the seven large tech stocks that have had a run up over the last couple of years, or everybody hears about Nvidia, which is a particular company that continues to hit all-time highs. I think the market cap today surpassed Apple. But when we're aware of those types of economic indicators or events, then we can start to talk to donors about gifts of stock. I can give you an example. A client that we've been working with for several years recently received a gift. They got 800 shares of a publicly traded regional bank. So that resulted in a $50,000 gift. So as that transaction came through, we reached out to our client and talked through the gift that came in. That particular donor had never given more than $1,000 a year. And so it was an avenue that they opened up. It was a conversation that they started to talk about. This particular donor is looking at her stock portfolio and saying, okay, I've got a large gain here and I don't want to pay capital gains tax on this. This is a great vehicle for me to make a gift. Additionally, we think of, yeah, it is creative. And an additional piece that we're thinking about from a longer term perspective or a planning perspective, we are in an election year, and we usually see a little bit of market volatility a couple of days before the election and a couple of days after, but generally the market stays pretty stable regardless of the party that is elected, and regardless of whether the incumbent is reelected or not. That being said, we are looking at some particular estate planning tax laws that are scheduled to sunset at the end of 2025. So we will be paying attention to what that looks like. And depending on what happens with the estate tax and the estate planning laws, there may be additional opportunities to be creative. So we think about that from a multi-channel approach as well.
Fantastic. Diane, do you have some insights you can share with us?
Absolutely. So I guess I'll move into some of the investment strategy. Once you have those dollars in the door, you need to be very mindful of how they're allocated and the different investment strategies that you can apply to the dollars. And as we like to talk about them, the different buckets of funds that you have. So we're in a really interesting interest rate environment right now. You can take very, very low risk, and there is high yield in those cash equivalent investment opportunities. So looking at your short-term reserves that are in cash, having a plan around anything that's not going to be utilized in necessarily the next 3 or 6 months out to maybe 12 to 18 months, and taking advantage of basically a 5% return with no risk. So we're highly encouraging our clients to take the first step in investing and making sure that they're utilizing those returns. The next piece is thinking the next 3 to 5 years out and what kind of capital projects do you need to plan for. If you have assets that you're accumulating towards those projects, it's important to have an investment strategy around those as well. And to Becky's point, we do expect some volatility through an election cycle, but the market overall will continue to go up. And so to be able to have your assets appreciate 3 years from now, if you're planning to project 3 years from now, you really want those assets to grow so that you can keep up with inflation and you're able to accurately complete your capital projects that are in the next 3 to 5 years. After that, we're looking at more long-term strategy and definitely getting into the conversation of forever funds. Whether it's a quasi-endowed fund where boards are designating dollars to a long-term strategy and they aren't necessarily tied up forever, but they can be spinning off revenue to support the organization on an annual basis and really help fill in those gaps that Leela is talking about with the cyclicality of fundraising. We want to talk about fully endowed dollars, and the unfortunate truth is that most of the organizations out there in the nonprofit sector are filling the need for services that won't be eradicated necessarily in our lifetime. So we need to be planning for the absolute long term and generations from now. Who's going to be carrying out these projects and these important missions? Because the sad truth is, a lot of these issues will not be eradicated in our lifetime. So the best we can do is set these organizations up for long-term success, knowing that generations from now will be able to rely on the services that those organizations are providing.
Great point. That's a great point. I appreciate you sharing that, Diane. Organizations can level up in myriad ways to secure financial success, and you've shared some of those tools while they're navigating this changing landscape. Election year, we've talked about that. But what are some other steps nonprofits and organization leadership can take to help stay on top of these trends in giving? You're an executive director at a nonprofit. You're a board member for a nonprofit. What are some types of tools that we should be paying attention to, or they should be paying attention to and discussing with their financial teams or their financial advisors, as well as the leadership and fundraising teams within their organization?
So it's a good question, and I think it's twofold, really. We think about strategic partnerships from a lens of getting experts that understand the landscape on your team. As investment managers in this space, we feel it's important to be sharing information, educational content with our board members, with our development teams. So having the right partners that bring expertise to national philanthropy trends and national economic trends, we feel is a key piece to sustainability. We know and have seen and continue to see when our clients can talk intelligently and succinctly about their investment strategy, about their sustainability strategy with donors, they get more support. The gifts are larger, the support is more in depth, and multi-year commitments are very, very common. So we're seeing that piece. So understanding who is the best partner to have as it relates to financial sustainability on the bus, we think that that's very important. The second part of the conversation, though, that we continue to challenge our clients with is having more candid, higher level conversations. So back to the point Leela made earlier with a particular client we've been working with, being honest and open about what the real needs of the organization are with a donor, you're finding more support. There's sometimes, I think, a little bit of a dichotomy where an organization will ask the donor or share what they think the donor expects them to be asking for. They'll talk about a project or a need because they think that's what the donor or the family philanthropist wants to see or what they've historically funded. Where when you peel those layers back a little bit and you're able to have a courageous conversation where you're saying, here's how you've supported us in the past and it's been wonderful, here's what we really need your consideration for. When you can open the eyes of that if you're a donor, your funder, with that kind of conversation, we see the support start to shift. Additionally, as it relates to that particular topic of having more candid conversations and kind of raising the bar, as we see a generational shift in where the wealth transfer happens, younger philanthropists are thinking about it very, very differently. They're much less concerned with outputs and more concerned with outcomes. So an easy example that we talk about a lot is they're going to care a whole lot less how many sandwiches you handed out last month, and they're going to care a lot about how many people didn't need to come back for a sandwich because there was other services or support provided for them. And so twofold, right? Have the right partners on the bus that really can help you level up your own acumen, but then being candid and having direct, honest conversation with your funders about what you really need.
Yeah, absolutely. Leela or Diane, do either of you have any points or anything that you want to share on that topic? For nonprofits, what can they start doing internally to level up their organizations? Obviously, finding great partners like Pivot and Endowment partners, asking candid conversations. Anything else that you'd like to share around, kind of pro tips for our nonprofit leadership and board members that might be listening?
I was just going to talk about planned giving for a second, as Becky touched on and Diane, yes, you should have experts at your fingertips, but so often I've heard development professionals are like, oh, it's too complicated. I don't have time. I know I should be, but I'm not. And it's like, there's at this stage in development, there's really no excuses. And so it really is something that your staff and your board should be educated on. And so yes, definitely bring in experts to help educate the team, but make sure the team, absorbs that knowledge and has that knowledge and can carry it forward. Don't just always rely on having an expert there, but you should still have them there to help you. But now is the time to definitely be pursuing adding that skill set to your team. And if you're thinking about budgeting for positions, if it's not in your budget, think about how you can carve out someone's time to be dedicating time to that, because this transformation of wealth is happening. And as Becky said, the younger generations are looking at it differently. I mean, it's all going to be complicated, but you need someone to be doing the plan giving piece, but also then working with the next level of generation of givers.
Yeah, I think that when we talk about plan giving and bequests, it can be quite overwhelming to a lot of organizations, but it really is simple. You have your donors that have supported you annually. Maybe it's a small amount, but the amount that they're able to leave as a legacy to your organization could be quite massive. And just keeping those donors engaged, and you don't need to have a complex understanding. A bequest is literally language put in their estate plan that designates an organization to receive funds from their estate when they pass. So it's actually quite simple, and then honoring those donors and keeping them engaged and having some sort of legacy society. These are all pieces that are really, really easy to implement, and it's easy to get planned giving language that you can hand out to your donors, and that is the ultimate long game in fundraising. And the work you put in today really pays off in spades down the line. Oftentimes we hear organizations say that they're concerned if they're talking too much about long-term and planned giving, then their donors are going to be less inclined to give on an annual basis. And we see the exact opposite. Once someone has put you in their estate plan, they're committed. They're absolutely committed. And we see that their annual giving almost doubles in the 8 years after they've made a long-term commitment to the organization. So it's really important to have those conversations and not be afraid there isn't going to be cannibalization of the annual fundraising. And that's just a common misconception. So we just encourage our organizations to have those conversations with their donors and not shy away from it. It's really important to the long-term sustainability.
Yeah, I think that's a really good point, and hope maybe that we should jot that down as a topic for a future conversation we have here about leveling up your organization from, going from surviving to thriving. And what does that mean? And that means increasing and leveling up your sophistication and your strategic planning, not in a strategic plan sense, but in a financial planning sense. And donors that have larger amounts of funds to share and to give and to make an impact, they are sophisticated for the most part, and they're going to ask questions to make sure you are as well prepared to manage those funds and those investments as possible. And so I think that that's a really great topic for us moving forward, is how can we help more nonprofits move themselves into that more sophisticated space, so they're not just treading water, they're actually gliding across that water and swimming well out into the future. So with that, I think this conversation's been great. We're trying to keep these so that they're a little kind of snackable bites of information for our listeners. So, personally, I found this really fascinating and enlightening. I hope our listeners have too. There are a couple of takeaways that I'd like to just point out as we wrap up. So a couple of those are: one, good data makes for great fundraising and superb financial sustainability. Take the time in your organization to dig into the data. What are the trends that you see within your organization's data? How do those trends compare to the national and global trends that we're seeing? What gaps are, did you shine a light on? Pull out that flashlight and see what gaps and what areas do you need to focus on moving forward. Also, it takes a solid team to grow your organization's capacity. So who is on your team? It could be very small, right? You might have an executive director and a board chair who's also the financial director. But who can you add to your team? What experts can you bring to the table? And, is it time to start strategically thinking about leveling up your finance, fundraising, and leadership group? And then the last takeaway that I have, and of course, you ladies can all chime in here too if you've got some other key moments that you want to highlight, but there are lots of tools to help us and help your organization get to that next level. How is your organization leveraging these tools like plan giving and estate giving, monthly giving, in terms of, as events, as Leila suggested, annuities? I know we'll talk more about those types of tools in a future episode, but what can you do to get creative and expand your organization outside of the same old what we do every year? Because that, as Leila pointed out in the very beginning, is not going to get you to where you'd want to go, right? I think it was Albert Einstein that said, if insanity is doing the same thing over and over again and expecting a different result. So the same holds true with fundraising and sustainability of an organization. Try something new and take some of the tips and tools that Becky and Diane and Leila have shared today. So any last comments or parting notes that you ladies would like to share with our audience?
I look forward to diving in deeper to a lot of this content on subsequent episodes. This is really important stuff. So thanks for having us today.
Yeah.
Agreed. Thank you.
Yeah, thanks everyone.
Absolutely. So if you want to discuss any of these points that have been made today by any of our key experts here, or simply want to level up your fundraising or organizational impact investing, the experts at Endowment Partners, Becky and Diane and their team, or Pivot, myself and Leila and our team, we're here to help you. You could reach out via these QR codes, our email addresses, and our websites. Contact us. We really look forward to helping you and your organization reach new heights. With that, we'll sign off on this first episode of The Giving Edge, and we look forward to sharing more with you well into the future. We look forward to that. Thank you so much, everyone. Bye-bye.